What is up, you guys? It's Rob here. Today we're going to be talking about ticker symbol AMC. It finished up over 15% on the day, almost another 2% in the after hours. And us apes are going to continue sending the message to the shorts that we are not freaking leaving. Thank you for any discount opportunities that we're going to get because we're going to buy the dip and hodl because we're going to the moon. And the squeeze is inevitable in my opinion, but we'll cover the charts, we'll cover the short interest through Ortex, we'll also cover Stocko Tracker, and then we're going to talk about how much money the shorts lost today alone and since the beginning of June. Hint, hint, guys, it's a lot of money. But before we dive into all that stuff, if you guys can, do me a huge favor, drop a like down below, hit that subscribe button, make sure you ring that bell for the YouTube algorithm. Also, if you do like free stocks, down below I do have my Webull referral link. You do get 2 free stocks by joining Webull, one when your account's approved, and then the other when you deposit $100 on the platform. And those 2 free stocks can be valued anywhere between $8 and $1,800. I also do get a free stock as well because you used my referral code, and it is a great way to support the channel. So thank you guys so much, and thank you for your continued support. We're on our road to 5,000 subscribers here, but let's dive into this chart and take a look at AMC for the day. So we had a beautiful gap up here this morning. We had a 4% ish gap up, which was nice to see. We definitely did fill it here during the pre-market hours. We opened the day at $51.83. So we broke above that psychological resistance of $50 during the pre-market, which is amazing. That shows how bullish this stock was today. His stock was incredibly bullish, aside from the fact when we pulled back from our high of the day. But that's perfectly fine because guess what we did? We set a higher low and we set a higher low into the close. We also did a great job of respecting the VWAP, which stands for the volume weighted average price, which dictates the average price that a person would buy AMC for today. And the times that we broke below it, it was very short periods of time, and the stock did not look comfortable at all below it. We also did find it as a level of support several times here during the day, right here around 1:30ish, and then really right before the close too. The other thing that I want to highlight is we did get an okay-ish period of consolidation up here towards that $58, $59 marker, which is incredibly bullish because if we're consolidating on the upper end of it, that shows that we're getting comfortable within that zone and getting ready to make that next move to the upside. Now, the next moves to the upside are going to be very difficult in my opinion. This is just me. Keep in mind, I'm not a financial advisor. None of this is financial advice. But we've been rejected here at $60 a lot of times. We hit a high of $60.54, but we weren't able to close a candle above that $60 on the 1 minute time frame at all. And $62 is going to be even more of a pivotal resistance level to get through. Once we get through these 2 resistance levels, I quickly see $70, and then I see a retest of the all-time high of either $72 or $77 that we saw during the intraday or pre-market, whichever one you guys want to go off of. But let's hop out here to the 5-day, 5-minute time frame, and you can really see that we found a nice bottom here at $39.71. That was the dip to buy, guys. It was absolutely beautiful. We continued our very bullish day today. We had a very bullish day on Friday. We touched $42 here on Friday. We didn't obviously touch that today because we gapped up nicely. We did get above the 53.21 level of support, which is good to see. Now, if we do fall to the downside, I'm going to be looking at this as our nearest level of support. After that, $50 is going to be, sure, maybe the psychological level support, but it's not a technical level of support. The other thing I want to highlight here is on the 1 month, 1 hour chart. Now, this shows we had a descending level of resistance here ever since our all-time high of $77. So I had this line drawn up. You can see that we're clearly breaking through it. We bounced off of the 200 EMA. So now we are essentially setting what's called a bear flag, which is going to be looking for a break to the downside. Now, if we continue moving up in this channel, it's bullish. In retrospect, we're moving upwards, but it's called a bear flag because we're looking for a move to the downside. Now, Guys, we traded 300 million shares today. We traded more shares than what we did on Friday, which is nice to see that volume is slowly stepping back into the stock. And I definitely think, are going to need some volume to step in to really get us above the $60 and 62 level. Because when we zoom in here, you can see that we've been rejected off of 1, 2, 3. We technically closed above it here. And then like 4 times. We've been rejected by it a lot. We've definitely tried testing it several times too, and we've been rejected here. So if we can get above $60 and get in between the 60 and 62 level, the 62 level isn't as strong in my opinion, because we really only consolidated during this on the 2nd and on the 3rd. So we don't have much data to go off of there. But the $60 level does seem to be a resistance at every single time we've gotten to. We've seen some pushback, and then we fall back and we try to retest it, but we haven't been able to gain it. So I'm looking for us to get through that level, hopefully tomorrow, if not later in this week, with some nice volume. And when we get that volume, we can see $70 and then a retest of the all-time high of $77 or $72. But the other thing I want to highlight to you guys before we take a look at the short interest and all that kind of stuff is really look how far we've come. We've come so far, guys. Yes, we did have a little bit of a pullback, but now we're making that move back in the upward direction. Remember how I've said stocks rip, then they have pullbacks, and then they consolidate, and then they set up for their next rip. And that's exactly what we've been doing. It's fundamentals 101 for stocks. Rip, pullback, consolidate. That's what stocks do. Now, if we take a look at the short interest here in Ortex, we see a decrease of about 0.23%. So our current short interest or free float sitting around 12.53%. Our free float on loan is sitting at 16.32%. We did see 9.5 million shares borrowed and about 9.69 million shares returned. So we have about a break-even change here. Now, the thing to highlight is our utilization is down to 77% because we've seen a lot of shares on loan being returned. Not necessarily shorts being covered, but a lot of shares on loan being returned. And that can be best shown by this line that I'm going to put here. So, on loan returned. This orange line indicates the on loan returned shares. So we see that here on the 4th of June, so remember this is a T+2 settlement, so on the 2nd of June, there was 33,677,422 shares returned. So we see that we've seen a sharp drop off here. On the 11th, we only had 13.36 million shares returned versus back here on the 2nd, we almost had another 34 million shares returned. So what this is indicating is that the shorts are returning a lot less shares, which is going to eventually drive up our utilization, which is, yes, a good thing. But this also, I'm trying to show you guys, is that this is not established short interest within the stock. So people who are saying the shorts are covering, sure, maybe some shorts are covering, but necessarily a lot of the short interest that's being returned is being done through shares on loan, which is not shorted within the stock. And this is still 100% squeezable in my opinion. Now, the other thing I want to show you guys before we hop in the Stock Tracker is the average time frame that these shares have been on loan. And keep in mind, when a share is on loan, they have to pay the cost of borrow fee, which is this 2.88% on average or 4.67%. And the average age of an on loan right now is 51.72 days. Well, 50 days ago, we're looking at like the middle of April time frame here, end of April. And what was AMC trading at then? $9.95. If any of these shorts have been established at this time, they are significantly underwater by 400 or 500%. The shorts are underneath a lot of water and are continuing to lose a lot of money. And this is the reason why I think we're seeing borrowed shares being taken out, is because the shorts are trying to average up to essentially avoid a margin call on their position. That's personally my opinion. What I think is going on here is the shorts are trying to average up to just say, hey, we averaged in, we'll make more money when this thing comes back down kind of thing. But guess what? This thing's going to continue to go up and up and up and up, in my personal opinion. And eventually, with the NSCC 002 of the automated margin calls and all that kind of stuff, it's going to really suck to be shorts because they're underneath a lot of water. Now let's take a look here at Stocko Tracker. We have 480,533 calls currently in the money. That is a lot of calls, guys. Just to give you a hint, we have 480,533 calls in the money. We have another 262,339 calls out of the money. That is a lot of open interest. The other thing I want to point out is 675,038 puts are currently out of the money. So we are in for a very volatile week within the stock. Keep in mind, Friday is quad witching day, which means we have monthly and quarterly expirations on Friday. So it is definitely more of a volatile day. So keep that in mind. The other thing is we have about 1 million short shares of AMC available to borrow at a 2.6% average cost to borrow. We see 7,711 short ETFs available out of 704,000. Now, the thing to take a look at here is we see that there was a decrease during the day. And this indicates that we're seeing short interest not only through AMC shares, but we're seeing it through short ETFs as well. The other thing that I want to talk about is essentially what's called a sweep. And what this is indicating is options activity, which is either bullish or bearish. This was a sweep that went through today, and it was extremely bullish. We saw a sweep on the $40 strike, $145 strike, $40 strike, $29, 60, 60, 40, 85, 55, 55, 55, all expiring this week. The 145 was for July 16th. That was a lone outlier. I'll link this down below in the description of this video. But basically what this is showing is very bullish sentiment within the stock, guys. And I want to talk to you guys about the options chain because the options chain is crazily stacked, and we have open interest a lot this week, but we also have open interest going in the weeks ahead, which is good to see because it doesn't show that interest is only stacked on the stock for 1 week alone. We will continue to see it throughout the future, which is important because if we don't see a short squeeze or gamma squeeze possibly this week, then we will be looking at it in the future. So just my personal opinion. But a few strikes that I want to point out to here to you guys is the $40 strikes up here that a lot of people are talking about that have 100,932 open interest contracts. These are most likely hedged for given that our price is $57. It's 100,000 calls. That is a lot of hedging that is going on. The other thing that I want to point out is the $59 and $69 call. We have about 20,000 and 25,000 open interest between these two strikes. And we see that at $60, there was 78,771 contracts traded today alone. That is a lot of money, guys. And at the $70 strike, we had 48,155 calls traded today. We have 16,586 of them currently open. And to give you a hint, 48,155, multiply that by the average cost of, let's say, $390, because remember, you're dealing in 100 share increments. This is not $3.90. This is $390. It's looking around $18 million. $18 million was traded on this one strike alone, guys. That is a lot of money for something that is out of the money, that is showing the bullish sentiment within the stock. We can come all the way down here and take a look at the $145 strike. We do have 47,479 calls opened at this strike for around $66 to $65. And we saw that 103,830 of one of them were traded today. The other thing that I really want to point out, and the reason why we're seeing a huge resistance here at $60 is at $60 for puts, we have 10,701 contracts were traded at the $60 put today. This was about a $915 to $940 contract on the day, and there's 7,000 of them open. And this is definitely a huge put wall that we have to get through. It's going to be a resistance, and if we get through $60 and we get through $62, and then we close an hour candle above both of those levels and indicate them as level support, is definitely going to be good, because once we get higher than that, outside of $70, there's not really that strong of a put wall. I mean, there's hundreds of contracts, but it's no thousands. And I mean, we're talking 62 contracts, 56 contracts traded on these strikes. It's not a lot of volume on these strikes versus really the $60 put. There was a lot of volume traded on that today, along with the $55 put. So keep that in mind, guys, moving forward. That's the reason why we're seeing a huge resistance here, is because a lot of people are saying that this stock is going to finish at $60 or below this week. So that's what a put is implying. But now taking a look at these tweets from Ortex. Having peaked at $60.55 today, AMC closed at $57, up 15.38%, creating losses of $488 million for short sellers in one day alone. Almost $500 million, guys. That's a lot of money that the shorts have lost. Now, the other tweet that I want to talk about here is the short interest update about AMC. Short sellers have lost over $2 billion in AMC since the beginning of June. That is a lot of money. $2 billion since 14 days ago, guys. That is a lot of money. And when I pull up this chart, and it's what I'm going to leave you guys with year to date, I'm seeing the shorts bleeding a lot of money. They're losing a lot of money. Us dumb money apes are gaining a lot of money from this. And I can't wait to see what's in store for tomorrow, guys, because I have a hard feeling it is going to be a crazy week ahead of us. So strap in, buckle tight, and make sure that you're ready for anything to come at you. And remember, we're apes. We buy the dip. Not financial advice or anything like that. But I'll see you guys in the next one. Peace.